Hello there. We'd like to talk about what's left for your kids and other named heirs when you take out a reverse mortgage. Here's what you need to understand. You're taking some of the equity in your house today to improve the quality of your own life now and in the future. So, when your house is sold, there'll be a little left for the kids after you die, but there's going to be equity in the house, and that remaining equity can be distributed to your kids and other heirs.
Let me give you an example. Let's say your house is worth $200,000. You own it free and clear and you're 70 years old. You would get about $120,000. That means that there's $80,000 in equity left for your kids. Now remember, each month the interest is adding to the reverse mortgage balance. That's happening because there are no monthly payments to pay the interest. So for round numbers, let's say the interest rate on the loan is 5%. On $120,000, that's $6,000 a year. After 1 year, you would owe about $126,000. After year 2, you owe a little more than $132,000 because the interest compounds. So you see the reverse mortgage balance is growing, and in theory, the amount left for your kids is going down. But that assumes the house doesn't appreciate at all. If it does appreciate, the kids should get some or all of that future appreciation.
Now, I know what you're thinking. My house is not appreciating, and it probably won't in the future. I would not be so sure about that. In fact, if you look over the long term from 1980 through 2010, houses in the U.S. have appreciated 4% a year. And now that we have reached the bottom of the housing cycle, we're likely to see appreciation again. Most economists believe that, and they say that we will. That's because of the massive amount of debt that our country's taken on in the last few years. They believe inflation is inevitable. In an example, we assume that in the coming years, your house will ultimately get back to appreciating at 4% a year, and that would add $8,000 more each year in value on a $200,000 house.
Well, that's interesting because we saw that the interest was adding $6,000 to $7,000 a year to the reverse mortgage loan. So here's the bottom line. If inflation returns, the future appreciation in the house should cover some or all of the future interest added to the loan.
Yes, and that means that the initial equity in the home, when the reverse mortgage is taken out, will be available for the kids, assuming that we have inflation over the coming years like we've had over the past 30 years.
Right. So in all likelihood, there will be something left for the kids and heirs, although it may not be as much as if you had not taken out the reverse mortgage.
Thanks for watching. Enjoy our other videos, and please call us if you have questions or you'd like more information. We are here for you. And remember, life is a blessing.